What's up, everybody? Welcome to the stream. Let's get started. All right, let's get going.
Recently, and for no reason at all.
What's up, you guys? Good morning. Smash that like button on the stream. Give us a subscribe to the channel if you haven't yet. Love you. Welcome, welcome. Prep charts check. Pre-market check. Glasses check. Is this one of those days where we actually open up? We have 2 days in expiration. Remember, don't forget. Expiration's Friday. Today is, I believe, Thursday. Careful in MHPs when we lose those, so we're going to watch out for this. The overnight trading pull back down to the upper HP estimates here. So we have a yellow line at 52.33. Keep that in mind. Go ahead and mark that on my chart. Bank of Japan arranging to end the negative interest rate policy at the March meeting. In the news today. Oh, put some music on here. How are y'all today? Check out for news. PPI and such already came out. Really nothing coming out today. Of interest, nothing tomorrow. Fed's balance sheet today. So that might be something. That's at the end of the day, though. How are y'all? Great webinar lesson. Oh, thanks. Can you hear me? Can you hear me? Yeah, we have new information about liquidity maps. New back tests, a couple of new rules. This was interesting. We're testing them out now. This is huge. This is huge. Huge for the strategy. It opens it up a little bit more. They're so dirty. So dirty. All right, you guys. All right, getting ready to get started. We got about a couple of minutes here. All right. My gut instinct is telling me we might have some down day today. Remember, we're expiring, so you might just have that expiration mechanic come through. Let's have a kick-ass day. All right. Okay, here we go. We're launching with positive resilience. Let's just take a quick look at this. All right, we are gapping up, as you can see, on SPY. So positive resilience. We'll see if this deteriorates when we trade lower or not. Your purple line's looking strong. I know, right? Well, technically, it's already been filled, so we got to delete it now. Even though they do act multiple times, once you tap it, we usually get rid of it. All right, so you have positive resilience, top of the box. This is resistance right here already. Resistance to downside, at least. Remember, res. Hold on. Let me write it when this finally comes in. Okay, our mean reversion again. This is gonna be a tough one. As we know, we open in mean reversion. We're gonna take the mean reversion. We will play this one today. We will play from here to here. This is a trade as well. This is one of the newer things. Omar. Omar knows what I'm talking about. We are opening in the zone though, so it's we're opening in mean reversion. So this is not a good setup again. Not good trades. Yeah, this one's not a good one. 50 to 33 support as well. There's a yellow. 25. Yep. DD's 0.92. So support off of bear zone here. There's not a good setup on this. Let's see if QQQ gives us any evidence here. Nothing good to trade on this. QQQ. Oh, QQQ is opening here, dropping there. Okay, yeah. Also mean reversion with the hedge break. Remember, with hedge break, we found out our probabilities don't really change much when you're irrational on the liquidity map pivots. This is one of the new things our backtest has revealed. Used to, I'd sit out on all the red lights on liquidity map. Now they're strong. They're just as strong. This is a thing that we take note of. It's a new thing we're testing out. We did a substantial 8-month back test on all the conditions we have under the different rational, irrational conditions. Found some really neat things. Happy Pi Day. Ooh. All right. Forgot about that. Math nerds, we celebrate Pi Day, 314. Chemistry nerds, we celebrate Mole Day. I don't know if you guys ever celebrated Mole Day, which is October the 23rd. Avogadro's number. 6.02 times 10 to the 23 molecules in a mole of something. Or 6.02 times 10 to the 23 things inside of a mole. June the 2nd, yeah, but I don't know if that's actually what real Mole Day was, because June the 2nd in the summer, we always celebrated October 23rd. But yeah, same thing, yeah. All right, we're at that yellow line tap. It's not tradable today. This is not an easy, good trade setup. HPs are down here. VIX is not volatile. It's hard to see any action building on this. This is not a good day. Not a good setup. Nothing to trade off of. Opening here, likely close in the middle. So supported bull zone is likely. I'll say that from here, 33.28. This is likely. This will be your bear zone bounce. So we found out res is negative. That's a good sign. That's what I do want to see. Possibly for a short setup. The short from here to the bottom. About 10 points. Do we break yellow? DD is 0.85. Bull zone touch is likely. So my thought is that here and here is something we see. Q, HP break. Yeah, let's look at Qs really quick. Let's watch on that. So with the way resilience is, the way we open today, we're likely to stay inside of this box more often than not, even with the hedge break. This is one of our newer discoveries that the probabilities we know that if you're in the box, we would stay inside the box 96% of the time when markets were rational, and when irrational, we said we didn't have a back test. We didn't trade it. It was just sit out. The rule was sit out. Now the rule is it still likely stays in the middle. Even when irrational, we're finding that our probabilities, at least just on liquidity map pivots, don't change that much. Everything else is still pretty solid. They change a little bit, but they're still tradable. Like, let's see from here. There's that bull zone tap. Okay, and we're negative on resilience. Let's put in 1. Yeah. Right there. It's fighting, so it's not strong enough to get a bunch of momentum. I'm gonna bet that we stay mean reversion here, and because resilience is fighting, I'm gonna take a bet that we do pull back into a V on here. Let's look at monthly maps on keys. Now, again, this is a little risky, but we'll see. Oops. Maps, it shouldn't travel a lot from here, and we'll see. Monthly maps still bullish and short squeeze, so mean reversions are hard to trade because usually we trade to the middle from either side, but this is this could break into momentum, so be very careful. So let's find monthly maps here. This is looking at the future of S&P and the future of NASDAQ. This is very spotty. You have bears shorting harder over the next week and bulls longing harder and then covering longs. So you can see there's an inflection point right about here as early as the beginning of next week after monthly expiration. There's a little bit of selling pressure already kind of building up here. Now, again, when we expire on the monthlies, it'll roll over. We'll have a whole different read on the market, but we'll see. Res is starting to lose a little bit of steam here. Should we play it hard? Why not? I have a gut feeling, now again, that typically into monthly expiration, you're going to see expiration mechanics push the market. The market can run really rapidly in one direction, so be very careful. We are hitting pivots inside of NASDAQ. So from here to here to here, I am going to take this trade. I'm going to watch this. This is fighting to stay above zero. There is not a lot of momentum to the side of breakout. And even if we do have an excursion into here, we found out that even when irrational, I'm not going to tell you the numbers just yet, but it's still good enough that we stay inside of this box or close inside of this box or test this box by the end of the day. Yeah, it's close enough, but let me zoom in a little bit. We open inside of mean reversion just slightly by like a couple of pennies. Let's see how good we do here. Wish me luck. Yellow balance, bull zone, bear zone. This is my motivation here. Given the new interesting notes on the back test, if irrational, this is what you have. If irrational. These are the probabilities that we stay in the middle. 70% if the lights are red. Okay, I'll spoil one of them because that's my trade today. Again, this is experimental because we don't have I don't have just a back test. I haven't traded like this yet, so I know I'm in the middle of the Robbins Cup doing some experimental moves here. But we'll see. The probabilities change, but not a lot. Still actionable. So with bull zone, mean reversion, bear zone probability, 96% of the time you stay in the same zone when all the lights are green. But what happens if they're a mix of yellows and reds? Or reds in general? Probability is still 70%. According to the back test. So we'll see. Resilience is negative, so I'm looking for some downside pull on this today. Even from here. So we'll see. The absolute high of the day was clearly where that event started, up here. So here's hoping for that. It's an experimental setup. I've never made a trade like this before. Whatever, let's try it. Let's trust the math. Res is negative, it's a really good sign. If negative. We're back down to half cap. What do you guys think? don't mind smashing the like button really quick. Do me a favor, everybody. Go down below the stream, hit that like button. If you haven't checked out the Rocket Scooter tools, by the way, go here. I want you all to sign up if you like to use our platform. And let me give you some good news. We're going to grandfather you in if you do this for me. If you sign up for the extended trial, $35 a month, just for the next 3 months, and we launch the marketplace and the platform goes free, by the way. There's a free version of the platform. It doesn't include any of our tools, but you can a la carte our tools into it. If you're already in the program, when we do that, we're going to hook everybody up with something in the conversion of that. Well, hey, look at the trade. Let's go. Keep going, baby. Let's go. Let's go. Go down, go down, go down. Experimental moves. Fingers crossed, trust in the math. We have to thank Humble Trader for doing an 8-month back test. Went through, grabbed all the data. Now again, not counting my chickens too much, but did an 8-month back test of all the different conditions, all the different lights to kind of justify us doing our rule assist mode and our automated probabilities that are going to be printed on the chart, like I'm drawing here. Verified that even when irrational, your bull zone, your bear zone, your hedge pressure still are 70% chance of holding, even when irrational, over an 8-month period. Matt, you're happy I'm in the Robbins Cup? You're on another level now. I should be in 4th place today. Fingers crossed. We'll see. I'm holding, yeah, bear zone is the scalp, right? I don't think I'm going to long at bear zone. I think I'm going to scalp to bear zone every time I get a chance to. See, I don't normally bet that we break and keep going. That's the rare thing, but we'll see. Right? I don't normally trade me reversion, but I feel like the setup is among easier than MP roll, bull zone, bear zone, bottom. Yeah, it does seem pretty simple. But yeah, so you guys can thank Humble, who went through and did a lot of math. Basically, his approach was, you know what I'm going to do, Matt? I know you say that there's like, you guys have showed the data. I've seen it. 96% chance this happens. And he's like, but I kind of want to go through, and he told me this. He's like, I want to go through and look at all the data and back test it, because I kind of want to call BS on that. Like, I want to prove you wrong. No offense. He's like, if I do, I'm going to share the results. And I was like, please do. So his intent was not to go out there and create anything to, like, you know, propagate anything other than truth. And so he came back with 6 months of back tests, or sorry, 3 months of back tests one time 8 months ago, and he's still been doing it ever since then. So yesterday with the Lifetime group, we went over the 8-month back test, and we found out something staggering. It had him testing 5 different things. And of those 5 things, we were testing what is the probability that bull zone still holds and bear zone still holds and hedge pressure still holds when the market's irrational. We never knew that. And came back showing about a 70% chance. How cool is that? We're gonna make videos on this. That's why I'm shorting right now. It's an experimental setup. Yeah, shout out to Humble, dude. And the Lifetime group, we got together last night to chew on all that data. And I'm gonna be a little wuss about this. I think I should hold the bear zone. Let's be aggressive. So if market's falling and breaks hedge pressure and lands at bull zone, what do we normally would do, right? We don't trade on hedge pressure breaks. I now can trade on hedge breaks. I'm trading on a hedge break right now. Probabilities are still really solid. There's the trade, 1,500 bucks. Let's take it. Done. Experimental setup 101. We'll take another short from half gap or bull zone. Again, I'm not longing against this. We have a hedge break to the downside because I need the long off of something to go with it. Look at that. Boom. Robin skip, baby. I'll take it. Simple as that. Okay, so we'll see what happens next. There is no setup from here, though. This is the small probability. Ooh, 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 Yeah, dude, Humble's the man, dude. Maria Garrett. So in the back test, we have numbers for irrational setups now. What are the probabilities? And they don't change. Hedge pressure, that was 75% chance of bounce and no bounce when rational. When irrational, it's 70s. It barely changes. Hedge pressure is actionable in all circumstances. It's fantastic. So excluding hedge pressure break as the cause of irrationality, the probability shifts very small. To turn off the move, Kenneth Williams, let's go, baby. Okay, so when we release the see, I know I saw being like a little wuss about this. It's probably going to keep falling. I had a gut feeling we're selling off today. Unfortunately, I have no rules from here other than there's MHP, and it's likely to bounce. So again, do I take a 70% scalp or no to bet that HP bounces very quickly? You want to take a small scalp just to retrace? Or am I over trading if I do that? Up 340, nice job getting that profits, lock it in, baby. Let's just take a small bounce off of here and see what we do. Remember, there's a 70% chance that we bounce and stay above here. There's a 70% chance we stay below here. There's a 70% chance we stay above here. Now, it doesn't mean we can't break through and smash, keep going. It is monthly, so I'm going to take one. I'm over trading, but anything else from here. So let's look at just the retrace and just see if there's just a quick little bounce before it comes down. I have a feeling we're selling off today. A gut feeling. Well, let's just see what we got. Let's draw a red line real quick. Okay, let's delete all these old ones. Remember, if I'm wrong, I'm wrong. Oh, again, that's why I picked something small. But let's just see if the second bounce does anything. That's pretty nasty. The volatility to dry up. I suddenly don't like the overshoot. I'm just drawing it on Thinker, so I don't have tick charts yet in Rocket Scooter. Just try one more thing. I mean, that's gross. Well, it's going to overshoot a little bit because we're irrational, remember, so you can be very careful on that. See, we get our first bounce right here. Again, still a 30% chance it breaks. So it's not like, it's not strong, but it's strong enough to act on. This is the rare of the two cases. But hey, at least we nailed that first little dip to the downside. That's good to know. I'll take it. Whew. This is not something I normally would do. I don't normally trade from here. I don't normally do this. But the probabilities are as such that we are more likely to stay here than to crash and burn. But crashing and burn will be devastating. So if we don't recover this, it's going to get pretty gross. Move these out of the way. Oops. Actually, no. You're already giving back a third of it. Oh, and we have DD float. Same thing. So DD float's in the vicinity here. 5205 on DD bands. Where are my DD bands? Again, experimental move. Let's see where Nasdaq is really quick. Nasdaq DD bounce. PM24. We're close. in here. Yeah. We're trying something new also here. Does the VIX collapse and market destroy itself today? Or does it attempt to squash a volatility and make a run up? It's a really nasty candle. I'm glad I got the short on it, but we'll see. I don't normally flip-flop either. This is against my rules, but I do want to test out the efficacy of this. Put some money on the table. At least interacting with here. Run into a new candle in about 6 minutes. We go to 9 o'clock. Or am I just over trading? What do you guys think? I want to test that we hold hedge pressure. I want to test that we stay inside of here and the DD band holds. So I've got two options here. Float. Yeah. Basically I'm trading both ranges here and here, the long up. All this hedge break is still pretty nasty and gnarly, so we'll see. It's still 8 points a drop right here. VIX hedge breaks so we can overshoot pivots. That's known and normal. Let's see if this works. It's gonna be a wide swing. I'm gonna take a long here and I'm gonna double down at float. Hopefully that volatility collapses. That'd be a good sign here. So we got the first move to the downside, which was great. From here, I only did from here to here though. I didn't expect that to happen. What do you guys think? I should just close and call it a day. I know these plays I would take these and I kind of wuss out on them. Like I missed out on a big run the other day because I traded back up and closed. So I'm gonna get this pop to hedge right here. Hopefully is what I'm looking for. I don't know what I want to do. Even if I pop to there real quick. And this is high probability. This is low probability. We keep going. Scare money, don't make money. That's right. I can't see my profit. It's covering it up. Okay. How comfortable and confident do I feel? I don't feel confident at all. I had a gut feeling that the market would sell off in expiration. Don't ask me why. The European market in the open this morning gave me that feeling. Let's see if we move, baby. Watching here, Nasdaq on DD band, S&P on float. We do have DD ratio 73, which is still strong enough to float. So we're still pretty strong probability that that's actionable inside of here, off of the bottom green line there. Go ahead and move these out of the way, so we're not going to be trading with those today. And then we have one more play here at DD. Okay, so we got that initial setup. Let me go ahead and remove all this. Do I just cut? That's what I want to know. Yeah, it rarely, Maz is great. Rarely does a clean reversal. So today I'm looking for playing inside of this zone. We have MHP here. It's a pivot. That's a pivot. Remember, these are the probabilities of this. Hopefully I don't get back. What I make, like, how much was it this morning? 1,500, 1,300? I wasn't even remembering. Okay, there's that yellow. Okay, here's the second one. Here's the second one right here. It's that second tap. Was it 15? Okay. Let's just double on that. Let's just see. Let's just see. Now, flow failure is a big deal. Like losing the green line is a big deal. I'm gonna keep it right here. I don't like this VIX hedge trick either, so. No. I certainly don't like it. If I get back on my gains today on this one, it's gonna be the end of the world. Oh, was it 1337 elite? Okay. Come on, baby. Come on. Hang in there.
With Asana, it's easy to monitor projects across teams.
Momentum was gross, though. It was really gross. Let's hit it one more time. Yeah, I'm literally gonna close out this contract in like 15 seconds if it doesn't start moving. I just added a third one just to add to the scalp. I'll close it back down to 2 as soon as it rides. Give me a pop, baby. Woo! Give me a pop. Let's go. Pop it. Pop it. Come on. Let's get that reversal momentum. This is a technique called the DD float. Really quick. Where's my tools here? Right here. We're looking for rejection off of the DD band when the DD ratio is good enough. There it is. There it is. There it is. Okay. Boom. Let's close out the dig. Drop it. Okay, so I added a third one, close out a third one on the scalp. I'm only down 200 on the trade now. Perfect, perfect, perfect. Look for VIX to collapse. Let's trim one more. Let's get down to the one that I want. Let's play the scalp one more time. Woo! All right. Let's ride that one up to the top. Here it goes. Whew, I can breathe on that one. Let's go, baby. That was quick. That's what I wanted to see. Man, you gotta tell me I got a cowlick in my hair. What the heck? Hold on. I'm not gonna lie, I just crawled out of bed today and came straight down. My goodness. Now I'm gonna need I'll need some medicine after that. What you executed was the best lesson you learned from almost 2 years ago and it changed your life. Oh, Tim, what is it? What was the best lesson you learned from almost 2 years ago? Well, if this still goes up, be knocking on the top 3 door. Yeah. I'm at 60 something percent right now, probably 70, I don't know. Hold on, I gotta make like a quick mock-up really quick for my developers. Let's get a piece of blue. All right. Ignore everything you're about to see on the screen. This has nothing to do with the trade. I'm gonna draw something real quick. Oh, whoa. Oh no. Where wanted to go? No, I turned it off. Oh, it draws my hand now. On display. Turn on. There we go. Oh my goodness. All right. Oh, fine. Let's do a different color. Why is there a hand? Okay. Okay, I'm watching my trade off to the side. Okay, one more option here. I'm designing things in the marketplace. Hold on. We're changing things. I know you guys love watching me do marketplace work. Sean, give me 2 seconds to answer your question, bud. And by the way, if you guys are here and have questions about Rocket Scooter, send me your questions really quick, and I'll answer them as soon as I get back. Oh. Not only do we have our platform, we're building this really awesome marketplace. Oh shit, there we go. I'll take it, $400 more. Let's go, close. Ah! Ah! Fuck this day. I'm tired. Oh my God. Humble, thank you for your stats, bro. Woo! I don't even know what I'm doing with my life. That dip was draining, dude. I'm sitting here. Oh my God. If you guys don't subscribe to the channel after that, I don't know. You guys are gonna watch and you're trading in the mornings. Oh my God. DD band, snap it, baby. I know. And from here, I don't fucking care anymore. That's a heart attack in a box. These are experimental setups. Both of these setups I would have never taken before. They're high probability setups now. Thank you, Humble, for your back test. We just ignored them on irrational days, and now we know they're still actionable. Garrett, I traded on your numbers today, dude. Oh my God. This is what I love. And when you guys ask, like, why are we doing a special lifetime only webinar? People are like, hey, how come we can't come to that? Well, you can if you're lifetime. We have this huge, awesome program. But Lifetime Group is also our think tank for bigger, newer things that once I test them, here's the thing. When I come up with a new rule or a new use of a rule, which is what I demonstrated twice today, these are 2 setups I would have never done. And I never flip-flop in the same day. I never short then long. I never short bull zone tap when irrational. I never buy DD ban on hedge breaks. I will now. But before we teach people that that is a higher probable move than not, the 2 moves you saw me make today, you guys know what we do. We get together, we chew on the data. 8-month back test showed that to be a 70% chance. Well, we didn't test DD ban, but I'm sure if we do, it would come up close to that. Liquidity map pivots all bounce 70% in irrational case, 90% when rational. Edge pressure is 70 and 75 consequently. So with the 70% chance irrational on bull zone balance, I assume that DD is related to bull zones, it'd be the same percent. Long story short, we don't make a rule unless I trade it with my own money, test it out, and I find it to be actionable without giving you a heart attack. Then we create a rule out of it. So now these 2 new rules are in the testing phase, or these new probabilities in the testing phase, and you're watching me test it live. In the middle of a world-class trading championship, I'm still risking my money to trade experimental setup. Because we don't tell you guys to do it and teach it as a rule until I've used my own money with it first. You're welcome. And that's the rule. It's always been here. And I'm going to do it for a couple weeks before I can sign off and say I like it. Some of the more courageous, adventurous folks in Lifetime in that little think tank group when we get together also may choose to on their own trade, you know, with those probabilities to the report, but they know what they're doing. And so if you've been trading long enough, you know your constraints. I know it's risky, so I only put 1 contract on there. I bought 1, I bought 2 more. I closed out of the 2 and I held the 1, and I closed the 1 on the pop. That's all of our advanced techniques. And 2 different entry points, long, doubled down a little harder, got out of my dig as soon as we popped, and then got out of my trade as soon as we hit red line, which is here. That's pretty much Rocket Scooter 101. I know it sounds like a lot, but hey, I'll take $2,000. Was that 20 extra percent? It was gonna put me closer to 80. That might be 2nd place. That's cool. Yeah, my shoulders got tight on that one too. One test, and I agree. And Louis and I understand that 1 test is enough. You guys want to know how long we tested DD bands before we released it? It was close to a year of testing. Now this won't be a year because this isn't a new indicator. This is new probabilities. Probably a couple weeks. Today is a very good demonstration for something like this because we had a hedge break and a monthly hedge break. These are things that we don't have data points for, and Garrett and I were talking about that yesterday. We don't have a lot of data points for a monthly hedge break. Catalyst and VIX risk interval break are still going to be sit out no matter what. I'm not going to buy pivots on those 2 things anymore. Catalyst is a maybe. We'll talk about that later. The Catalyst was also considered in these probabilities. So we're going to have some discretionary choice making added to this, which will be kind of nice. MHP break, we don't know how to rank it yet. We talked about that for about 10 minutes to kind of speculate on that one. And close to expiration. Yeah, we have like a weird sort of a ochre. You have that monthly expiration effect here as well. So I think this is the end of the predictable day. Oh god, that just feels so good to like see it work in action. And they were quick. Remember when I got it on the dig, I said, I need this to work in like 15 seconds. I need that bounce to be sharp, which was good. I would never leverage up on hedge pressure breaks. We always trade small, and you should trade small. So that's going to be the rule going forward. Also trade small. Don't do what I just did with minis. You should do micros, which is what I should have done, but whatever. Kevin, let's do some of your stuff. Breathe, Matt, breathe. Wisdom King. All right, we're doing good. Your LPM group, while you're impressive, watch many live traders. You have the most impressive and rational setup and trade system. Hey, thank you so much, LPM. We love your feedback and appreciate that. All of our stuff is mathematically based. Our team, it's all probabilistic. We do probabilities. These probabilities are about to be printed on the charts, actually, once we get our live backtesting built this year. We have a team of people that get together that are actually just members. It's not even employees who get together and we chew on the data. If the data is bad, we throw it out. The data is good, we keep it. So it's data driven. It's true quantitative approach. So the neat thing was the guy, Garrett, that put together the back test. I told you, he put it together and said, you know, Matt, I've been a member for a while and I love this. This stuff is awesome. This is one of the coolest things I've ever seen. But he says, your numbers are, he's like, you say you tested this thing and it's like 96%. He's like, you don't mind if I do a back test and I report to the group. I kind of want to call bullshit on that if I find bullshit. You cool with that? I was like, let's go. Not paid, under no influence of us, for the sole sake of the truth. And he comes and posts in Discord out of the blue, hey guys, here's the numbers I have so far. And turns out that Matt's stuff was right. I'm going to keep going with the back test. He came up with a similar 96% on bull zone balance kind of thing. And it's like, okay, I'm going to keep going with the test. And that was 8 months ago. And yesterday he came through with the document that shows from that point forward till now, I gave him a whole list of conditions. Like what's the probability of does the bull zone bounce? If the lights are all yellow and green, what's the probability of bounces if any of the lights are red? What's the probability that hedge pressure breaks or bounces? Rational, irrational. What's the probability that if hedge pressure breaks, you still bounce on bull zone? So what happens if you have a hedge break and the market collapses and then falls into like monthly hedge or falls into DD? Do you still trade it? So he came back with answers to all these things. We're going to decipher them, chew over them, and then see the numbers. Long story short, the numbers are actually better than expected. When these lights were red, normally we would say sit out under all conditions. But now when they're red, most of our stuff is still tradable. We just didn't know the numbers to really say. So instead of sitting out, what we talked about yesterday in the lifetime group is it opens up more opportunities to trade in fewer sit out days. Now, granted, you must know that in irrational, you still trade small. When any of these lights are red, you'll do 10% of your normal position. So an example is the rule I have for futures trading. If you guys want to write something, I'll teach y'all something before I get out of here. Imagine that a contract's initial margin requirement, and this is a cool trick if you guys have never done this in your futures trader. Initial margin requirement, you get this from the CME site. You do 1.1 times the maintenance requirement, or the performance bond minimum. Gives you this number right here called the IMR. You take their net liquid account. Let's say they have a 30K account. That's how much money I have, my account. You divide that by the margin requirement that the CME sets for clearing, the minimum, you end up with 3 minis, if that's the cost per mini. If your broker gives you $500 contracts to trade, don't be an idiot and use that. Don't go in there and buy 60 contracts like a numbskull. Don't do that. Cash balance your account like this and keep yourself to 3 minis. What this rule actually does, net lick divided by IMR, it roughly gives you, give or take, 10 to 12% loss on your worst possible day on a 1 risk interval drop in the S&P, which is a catalytic move, which is roughly equal to about 32 points, right? That's what this math does. All the stuff I just said, I'll give you an example. When the market moves very rapidly, it moves roughly a distance called the risk interval. This is something we've decoded in the futures world. There's a bunch of hedging. This table right here, and I'm about to show you this right here. What is it? 32.5 points. It's not going to be any lie that the dip from where we fell to where we stopped is also about 32 points. This is what, 52.02 plus 32 is 52.34, which is here. When that drop happened, we fell exactly a risk interval before it turned around. Futures moves in chunks of this interval. It's a function of hedging around risk of margining risk, sorry. The whole thing, I could write a book on this. Very one principle. This number appears in a lot of our equations though. There's a reason the futures moves in somewhat discrete intervals. There's hedging taking place in those boundaries, despite these other pivots on the table, on the charts. So long story short, when the market moves rapidly, it tends to move 32 points before you can catch your breath. This rule secures the idea that your account, at worst case scenario, if you don't have a stop, the moment you get to breathe on that first bounce, you're only lose 10 to 12% of your account, not blow up. If you start using $500 contracts, like your, I don't know, your trading Furus and paper trading, trader funding program influencers that do this crap, you can blow up, you could blow up your account here. If anybody tells you they trade $500 a contract, run as fast as you can. Person has no idea what they're doing. Do not let anybody tell you they day trade with intraday margin. No real trader. That's just gambling at that point. Don't lever up in futures. Take it from a pro, okay? How have I not lost a single trade? Wait, I've lost like one trading day, I think, in this account because I'm careful and I manage my positions very well. This equation will save your life. If you learn anything today for free from me, this equation is the worst case scenario on a risk interval drop, which typically contains the market very quickly before it dies on you. And you don't hold with your fingers crossed right now, okay, I hope it reverses, I get my money back. This turns your leveraged future account into a cash equivalent account without margin. So LPM and other people here, don't just think that I find really kick-ass pivots to trade on. The managing a position is the secret to surviving in this. So net lick divided by the margin requirement, the real margin requirement. Don't use leverage. You're not here to gamble your money away. You're here to grow an account by trading, right? Even if you might feel super confident, that rule keeps you there. Now for this Robbins Cup, I've modified the rule to go advanced. I go, I'm trading 2 and 3 times margin to give myself a little bit of acceleration up front to overcome the hurdle that you have of commissions. Current the account size right now, I should only be trading at most roughly 1.5 minis. That's about what that equation limits me to. And you saw me trading 3 today. So this is my risk. Now I'm trading 2R by my own rule. So the rule I'm actually, and again, I'm doing this because I know I'm going to do this. Net lick divided by IMR. This is what I'm purposefully doing, which turns those probabilities to 24%. Again, I know what I'm subscribing to. This isn't how I really would trade. This is how I'm trading for this Robbins Cup, is they squeeze commissions out of you and you have to give yourself a little more risk to get out of that initial slump. And so with that being said, I'm pickier. I was pickier at the start. You saw me sit out a lot of days just to trade at that margin. Today, I did stupid risky stuff. Traded 2R on experimental setups. I shouldn't have done that. But I was confident in the numbers. You run faster with the Maserati. Yeah. Love you, man. I'm out. Later, Josh. Have a good day, man. See you later. MHP broke 6 times in the test. Oh, Garrett said MHP broke only 6 times in the test. So now you have another one to test off of, which is good. 2 of those cases we opened above hedge pressure and MHP 4 times below HP, but still extended below MHP. Okay. Also just about pivoted on the overnight low HP. Wonder how those overnights affect whole day trading. Yeah, and Garrett, that's one thing we got to test too. The overnights have actionability in the daytime. The dynamic open interest model does that. And as we still know, the overnights, this blue and yellow, also have pivoting action. There's some symmetry there. And Nasdaq is case in point. What are the probabilities of those? And I know I've saved the history of that. We can go back. I know we had a group that was compiling all that data. to go back and test that as well. We're going to feed all of this data into our AI machine that's going to go back there and do these real-time probabilities under these conditions. And when we're done with this, you guys, it'll be printed on the chart. So imagine you have your liquidity map right here with the real-time probability. I'm just making up stuff. Actually printed here. And then say one of these lights goes from yellow to red, and all of a sudden these numbers change in real time. Whatever it is. So as the conditions change, the probabilities change. That's the goal here. We're going to feed all this initial data into the bot, and the bot's going to update those. These liquidity maps are about to have numbers drawn on them. So make sure you subscribe to the channel if you're here. We'd love to have you stay part of our community. We love y'all. Oh my God. That's how you pass the degens on the Robins. Yeah. All I know is that I enter the Robins for one reason. I listen to all the gurus. There's like 4 or 5 gurus all yelling and screaming at each other, compete in the Robins. You do it, you do it. And I just did it to kick all their asses, and I'm doing it. So that's the only reason I entered. I don't even care if I win. I just know that all those people on Twitter that were yelling at each other, I'm completely like face stomping all their trading systems. So whatever. That's all I care about. All these people are like, you enter. Well, you enter. I'll enter if you enter. Well, you enter, and we're gonna beat you. I'm gonna beat you. And nobody was mentioning me or my name or nothing. And I told her, I'm gonna walk in there. I'm gonna quietly win this thing, and walk away, and not even go out there and brag, and not go rub face facing. I just want everybody to be like, while you're watching everybody fight, I want people to watch. Here's what's gonna be like. This person. You enter. This person. No, you enter. And then everybody, the crowd over here, they're all cheering. Woo! Fight, 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 fight. And then what you're going to see is you're going to see somebody in the background, really far in the background, just slowly walk by. I don't know what it's going to look like. Grab the fucking trophy. Quietly walk away while everybody's like, huh? Wait, huh? What? And these guys go, huh? Wait, what? Huh? Huh? And then I go back to work. You enter. Well, I'll enter if you do. Well, I'll bet you this. Well, I'll bet you that. And none of these people even made the leaderboards. They're not even close. And then I'm just gonna walk up, grab the trophy, walk home, and not even say anything. Not stop and sign autographs. Not stop for the selfies. Not even tell everybody to whip their ass. Just walk in and do it. So that's it. I only entered to beat those people. I don't want to trade with this ridiculous commission structure. I walked in to stun on some haters, you know what I'm saying? Let's go. I'm just gonna quietly walk up and be like, I guess I'll take this home. Okay, I'll go home. And I won't even go on social media and rub my face, and I'll just quietly do it and quietly walk away. Matt would along this liquidity Eunice. Yeah, it's close to MOPEX, and I know that that's the reason why we get hedge pressure being actionable. And the neat thing to see right here is that we do have MHP also was negative here, which kind of got me scared why we dip again a second time. And I was only trading back to MHP because this yellow line was negative. Y'all know that. Okay. The reason this just didn't continue to free fall, would you say that options positioning, algos, immense repositioning, buying the dip? What's the major force? So DD-Band has this whole thing that has to do with CME span, where it measures the risk of the positions held by these market makers, these reportable entities. The risk interval is where it's all at. There's hedging that just takes place at DD-Band
every single day. It's always going to be a high volume pivot at this green line. Always when you touch it. The effects and mechanics of what goes on here, I'm not going to lie, is still somewhat of a mystery. We understand a lot of what's going on there. But again, this what happens here is like the sum of a lot of things, the sum of a bunch of participants doing a lot of things. This was anecdotally observed, but we know that at risk interval moves from any important point of high volume or any important point of consolidation are because futures are allowed to be flexible against the thing they're tracking. And dealers know that other people are supplying liquidity to the market, and they know where everyone's risk is, because the margin requirement is basically like a wide open window. When the CME says this is the margin requirement, they're telling you, by the way, this is the sum of all of y'all's risk. We set that margin requirement to 12, I don't know, 900, I think, something like that. That's the minimum money you must put into clearing. And these firms know that if they raise that number, that volatility is expected to be higher. And what we know is that volatility is based on the liquidity of the market. It's the inverse. So if buyers are like long risk here and short risk here, then you know that's where your volatility likely is. Your change in state and your second volatility is if people have short risk farther out. It's where everyone's positioned in the market. So people position a certain way, CME makes a margin requirement, then people that are positioned hedge against that number, and it goes in its circle. It circularly references itself. It's recursive. So it's like, I have a position here and they told me this is where everyone's position is. Oh, it's narrower. Okay, well, let me hedge where it's narrower. Let me adjust my position. And then they'll adjust that number, and then they'll adjust their position. And then it converges to like a dynamic thing. It's a program called CME Span, SPAN, that sets these numbers, and we reverse engineered that process to come up with this number here. We did this when 2018, 2019? Something like that. No, 2016. Sorry. Man, so many years have passed. So what happens here, what happens is some of a bunch of participants' action. There's always high volume. It's likely hedging. It's likely algorithmic, self-fulfilling, meaning that people expect other people to do something, so they're longing to get ahead of the other ones. So if, say for instance, like you're a market maker with a position here, MM, and you're supplying liquidity buy side there. All your risk is here. And you go out there and you bought puts in the underlying just to hedge your long side in futures. Okay, so you bought puts, you long futures, you're balanced somewhere in here. And because other people are watching you do that, the put sellers are longing the market in futures because the puts are out of the money, so they're forced to dump delta, which causes it to go up. One of the things we know that happens. So the person that sold these puts, as the puts go in the money, they're going to short further. As those puts go out of the money, they're going to cover shorts. So you have some short covering that's happening there from put sellers against the dealers hedged there. See how complicated it gets? But that's order flow that you'll see. The other thing is that people might just be longing futures there just to know that as the S&P moves, futures will sort of oscillate around it in the mode of a risk interval. Now, normally futures will trade tight on the S&P, but anytime there's an event that happens, futures will move a risk interval faster for the S&P and they consolidate. You see that all the time. And that's what this is exploiting. So the idea is that it just could be people getting ahead of that expected move and knowing that, okay, it fell a risk interval, let me long, because I know some shorts are going to be covering. And so it could also be a little bit of speculative trading taking place as well. It's all hedging and speculation right here, but the idea there's a high volume pivot speaks volumes, and it's usually reversal volume. So when you exhaust that candle against this green line, volume goes up and decays, and you stay on the top side of it, it usually goes. Stun on some haters. You forgot I'm H-Town? That's right, baby. That's right. What happens to your method if you get so much attention after winning? Nothing. Our method isn't a gimmick. It's not exploiting anything that can be countered. That's the best part. Everybody, it's a the discussion we've had internally is, so what happens if everybody uses our stuff? Does it become ineffective? It actually becomes a conversion evolution process. If everyone uses our stuff, then everyone has to use our stuff. There's no counter to it. And I'll tell you why. Because what hedge pressure does, it's not anything gimmicky that people are going to trade against and take away. Hedge pressure is actually, and walls and stuff are different than another kind of. Where's my pen? Oh, there it is. Hold up. What's going on here? Why am I on the wrong screen? Oh, I have no idea. Okay, so like if I go out there and I long spy, I'm just gonna make up an example here. Long spy, me, a dealer short spy to me, and bot calls. This entire position, this tandem position they have. I'm gonna put the box right here. They're short and long at the same time. If they delta weigh that trade, meaning they only have, if delta on those calls is 40, they only have 40 shares of SPY per call, and delta goes to 0.5 and they have 50 shares and they stay delta weighted, then this trade is fully neutral, okay? So the seller of those calls, which is like market maker number 2, as price fluctuates and goes in and out of the money, as delta changes, they're going to have to like long and short to balance their position all to delta weight because they're on the sell side of those calls. So the option sellers are who we're exploiting. And because people will weigh their options, since options pricing in Black-Scholes is based on all these factors that we derive the Greeks from, as long as Black-Scholes exist, then hedge pressure, which is the maximum gamma, which is the first derivative of the delta change per price, will always be true. If this is gamma max of just the dealers that sold options to these guys, which is what hedge pressure is, maximum gamma. Gamma max is a fancy word. It's the delta is partial differential over del price I think it's really time consistent there. So long story short, this is delta hedging. This term right here, this is how much you delta hedge. The change in delta per price is directly proportional to the change in shares that you buy. So this is the amount of hedging that takes place at the maximum gamma is the maximum hedging. So if we calculate the maximum gamma, we calculate the maximum order flow, which is why at these spots there's a volume spike. It's the maximum order flow of hedging. And as long as delta hedging exists, we're just revealing where it's maximized. And so Wall Street would have to come up with a completely new way to hedge, a whole new philosophy, and they have to get rid of Black-Scholes. And then we just take that equation and rewire hedge pressure to calculate that. If they come up with a new pricing model, which they do, Black-Scholes is not the only options pricing model people use, but it is the industry standard. And as long as Greeks exist, hedge pressure is going to be a high volume pivot every single time you touch it, no matter what. You can't counter it. People will have to invent a new way to hedge that's not using Greeks, and there's no way that's ever going to happen. That's the neatest thing about what we've done. It's not a gimmick where we see like something priced in 2 different markets and we're trading the arbitrage, and then the more people that do it closes that gap. We're literally revealing high volume pivots before they happen. And that's the whole point of this. Anytime you touch hedge pressure anywhere, it's a volume spike. In any instrument, in any particular scenario 100% of the time. Would I long at MHP right now? Mahesh, everyone answer the question for Mahesh. Would you long at MHP right now? You have a number called MHP resilience that helps you break that tie if you need to. It's negative right now. What do you think? It's not a good long setup for me. I wouldn't touch it personally. I can't tell you what to do. Obviously, I can't instruct you on your trades, bud. I wouldn't touch it. 2 or 3 days before monthly expiration, MHP becomes actionable, right? It usually closes right in on the price as all that theta decays. So what you'll see, or sorry, is that theta decay is maximized. You'll see MHP come right near the price. Do you see how as we're trading here, it's fighting and it's not winning easily? Which is why I exited here, because remember when we popped here, I exited because MHP res was negative. I don't think I mentioned that when I exited, but right here, it's expected to resist and that number is negative. That's why when I got that pop, I was like, oh my God, close out. Whew. Right. So this doesn't mean it's destined to reverse, but it's going to fight. It's not going to be a clean rejection. This is negative, right? Yeah. Oi, mathematics, we love it. If you guys liked Rockseater thing, the cool thing about it is that all this math that goes behind the scenes, you better trust that we're doing our homework on the math side. We just give you guys cool little cartoons to help you read the market. This is the truest quantitative approach. Quantitative analysis of, you know, probabilities and you know, a true quantitative approach to the market is looking at numbers. To us, we look at conditional restraints, say yes or no, or maybe. This is like yes, no, maybe. And then we just have pivot rules and we give you some cartoons that show you what all the rules are, the different scenarios, and just these are it. That's it. This is my entire strategy. Right here in these couple of things. So this is like if the number is bullish or bearish. This is if it's bullish or bearish. This is the float, the trade I made this morning. This is some cautionaries. This is a liquidity pocket. This happens sometime. That was also today. This red line was my trade today. That's what I shorted today. And so, yeah, you just learn and memorize these things. And then this tells you how much to trade, like trade heavy, trade light, or sit out. And then these rules help break ties. This number, these numbers. How's the Dow Jones monthly maps? Take a look. Whew. So the Robbins Cup numbers update close to about noon. So yesterday I actually went up, but so here's the thing. On this particular day, remember on Friday was on the leaderboard, I was at 49. I'm neck and neck with this guy. I went up to 51 and some change, maybe 51.2, and he went up to 53. So I didn't actually lose, I just got outpaced. And then yesterday I went up to like 60 something. So when yesterday updates, I'll be on here hopefully with 60 unless this person got 70. So I haven't lost. So somebody was messaging me like, did you blow up your account? I'm like, no, I actually went up. I just didn't go up fast enough according to these dudes. So I'm now probably somewhere here. Today we'll update yesterday and tomorrow we'll update today. So tomorrow, unless I do something stupid, I should be up here with 80%. So on Monday, you'll see me maybe in second or third place if these guys lose. So we'll see. Wish me luck. Oh, Keith said thanks for the info because of obviously it took a huge massive positioning to stop that retrace as much as we did so far. It is, yeah. So the idea is there's going to be some kind of hedging there. Why did, oh, my connection was severed. That's weird. Well, I guess it's good. I guess that's good enough time, I guess, to close the stream. Let's call it a day. Thank you for tuning in. If you guys haven't, remember, check out the Rocket Scooter platform. Check out our tools. It's positional risk analysis. We do a whole different style of learning here. We have really solid high volume pivots. We predict volume before it happens. There's a bunch of math in the background because we're engineers, but for you, we'll give you some cartoons to make it easy to learn. Trust us to do the math. For the true quants of futures trading over here, 6.02 times 10 to the 23 items in a mole. But today's Pi Day, actually 3.14. Happy Pi Day. But yeah, so feel free to check it out. We look at options to derive a lot of this information. We look at things like margin requirements to derive a lot of this information. It's not just price action technicals. You may trade like that. This is a whole new layer to add to your analysis. It's pure confluence. It's not adding indicators on top of indicators. It's adding, you looking at the dark side of the moon instead of the light side of the moon. You're getting a whole different view of it and a new layer to your tool set. So feel free to check us out. It's only $35 a month for the first 3 months to check it out. It gives you all the indicators, access to the platform, access to the Discord, access to pretty much anything. And if anything, after 2 or 3 months you hate it, walk away, but you'll walk away knowing that you learned risk management from the weirdo in the glasses who's on the leaderboards of the Robins Cup. We love you. Thank you for tuning in. We'll see y'all later. Sub to the stream on the way out. And feel free to leave a comment or join us in our Discord. Today we have a webinar at 4 o'clock Eastern, and we will see y'all then. Still a lifetime group. Okay. Bye. Oh, monthly maps. Shoot. Let me load that up really quick. There goes my sign off. Remember, after Friday, we go into the new month. It's going to change. Dow's looking a little bearish. Bears shorting, bulls exiting longs. The Dow's looking very toppy leading into expiration this week.